Are you worried about the potential recession coming in 2023? Many experts are predicting that a recession could be on the horizon, and it's important to be prepared. But instead of feeling anxious and helpless, why not turn this potential crisis into an opportunity to make money? You're watching Wealthy Buddha, and today we're discussing how you can not only weather the storm of a recession, but actually come out ahead financially. So if you want to learn how to turn a recession into a profitable time, keep watching. Please keep in mind that this is not legal financial advice and is meant for entertainment purposes only, and to seek a finance professional for proper guidance. Throughout the history of the United States, there have been numerous economic recessions. An economic recession is a period of economic turndown typically characterized by high unemployment, stagnant economic growth, and falling prices or deflation. One of the main tools the Federal Reserve, the central banking system of the U.S., uses to try to combat inflation and stimulate economic growth is adjusting interest rates. When the Fed wants to stimulate the economy, it will lower interest rates in an effort to encourage borrowing and investment. Conversely, when the Fed wants to slow down the economy and combat rising prices or inflation, it will raise interest rates in an effort to discourage borrowing and curb spending. However, raising interest rates too much or too quickly can lead to an economic slowdown or even a recession. This is because higher interest rates make borrowing more expensive, which can discourage investment and consumption. As a result, businesses may scale back production and hiring, leading to higher unemployment and slower economic growth. So what does this mean for a potential investor? If you'd like to start investing in the stock market while stocks are essentially at a discount, one of the most important things to keep in mind is not to try to time the market perfectly. Trying to time the market during a recession can be a risky endeavor. It's impossible to predict exactly when the market will bottom out and start rising again. And if you try to wait for the perfect moment to start investing, you could end up missing out on a lot of potential gains. Take 2020, for example. The COVID-19 pandemic caused widespread economic turmoil and sent the stock market plummeting. Many people panicked and sold off their stocks, thinking that the market would continue to fall. However, the market ended up bouncing back relatively quickly, and those who sold their stocks at the bottom missed out on the subsequent rally. Instead of trying to time the market, it's generally a better idea to consistently invest any amount of money you can on a regular basis, even when the market is falling. This way, you can take advantage of dollar cost averaging, which means that you'll be buying more shares when prices are low and fewer shares when prices are high. This can help to smooth out the ups and downs of the market and increase your chances of making money in the long run, even if the market rises quickly again. During a recession, it is important to invest in healthy large-cap stocks that are less likely to lose value. Large-cap stocks, or stocks of well-established companies with a market capitalization of $10 billion or more, tend to be more stable and less volatile than smaller, riskier stocks. In times of economic uncertainty, it can be a good idea to focus on sectors that are more recession-proof, such as healthcare, consumer goods, and utilities. Healthcare includes biotech and pharmaceutical companies, which can do well even in a recession because people still need to buy prescription drugs and seek medical treatment. Consumer goods, such as food and beverage and household and personal products, can also do well because people still need to buy these necessities. Utilities, such as electricity and water, are also considered relatively recession-proof because people still need these basic services. While these sectors may not see the rapid growth that some other sectors, such as IT and consumer discretionary, might experience when the economy bounces back, they can provide a certain level of stability and consistency. Another option to consider during a recession is dividend stocks. Dividend stocks are stocks that pay a portion of the company's profits to shareholders on a regular basis, typically quarterly. These dividends can provide a steady stream of income and can be a good option for investors looking for a more conservative approach. Investing in funds such as the S&P 500 can also be a good idea during a recession. Funds are collections of stocks or other securities that are managed by professional investment firms. The S&P 500 is an index fund that tracks the 500 largest publicly traded companies in the U.S. and is considered a good barometer of the overall stock market. Investing in a fund can be a good choice for those who don't want to put in the time and research it takes to choose individual stocks, as the fund manager does the work for you. Funds can also provide diversification, which means spreading your investments across a variety of different assets to reduce risk. This can be especially important during a recession, as it can help to mitigate potential losses. Gold is always another great investment option to consider, and especially for 2023. A smart investor should consider buying gold before and during a recession for several reasons. Gold is a precious metal that has long been seen as a safe haven asset, meaning that it tends to hold its value or even increase in value during times of economic uncertainty. This is because gold usually rises in price as the dollar falls, so buying gold before a recession can be a good way to get a cheaper price. Gold also has the added benefit of never losing its value because there is a fixed quantity of it in the world. In contrast, the value of stocks and bonds can fluctuate significantly based on market conditions and the performance of the underlying companies or governments. Gold is also a liquid commodity that can be easily turned into cash in most countries. This makes it a useful asset to have in case of an emergency, as you can quickly convert it into cash to pay for necessities. Investing in gold is also a good way to diversify your portfolio and lower overall financial risk. By including gold in your portfolio along with stocks, bonds, and other assets, you can help to balance out potential losses in one asset class with gains in another. This can be especially important during a recession, when some assets may lose value while others hold steady or even increase. Overall, investing in gold can be a smart move for any investor looking to protect their wealth and prepare for a potential recession. While all of the investments mentioned so far in this video are great options if you're looking to make money during a recession, there is one investment that you can make that will arguably increase your chances of financial success more than any other. Investing in yourself is often considered the best investment you can make, and this is especially true during a recession. When the economy slows down and job security becomes uncertain, it can be a good idea to focus on building up your own skills and knowledge so that you are more competitive in the job market. This can involve things like continuing your education, learning new skills, or gaining additional certifications. By investing in your own development, you are increasing your own value and making yourself more valuable to potential employers. This can help to increase your chances of getting a job or negotiating a higher salary. Investing in yourself can also involve things like improving your health or building up your personal network and developing new hobbies or passions. By taking care of your own well-being, you are not only improving your quality of life, but you're also making yourself more resilient and better able to handle the challenges that come with a recession. Building a strong network of professional and personal connections can also be beneficial, as these relationships can provide support, mentorship, and potential opportunities during a recession. Finally, developing new hobbies or passions can help to keep you engaged, motivated, and fulfilled, even during difficult times. Investing in yourself is a way to take control of your own future and to increase your own value and worth. This can be especially important during a recession, when external circumstances may be out of your control. By focusing on your own development and well-being, you can position yourself for success and weather the storm of an economic downturn. Thank you for watching this video on how to make money during a recession. While it may seem daunting to try to navigate an economic downturn, the good news is that there are plenty of ways you can endure the hardships and even come out ahead financially. By following the tips and strategies outlined in this video, you can take control of your own financial future and turn a potential crisis into an opportunity. Remember, making money during a recession doesn't have to be difficult or stressful. With a little bit of planning and effort, you can come out on top and be better prepared for whatever challenges come your way. Don't forget to like and subscribe, and from all of us here at Wealthy Buddha, thanks for watching.